All right, good morning, good afternoon, everyone. It is the broad market analysis. So, just as a reminder, what I'm doing for those traders who are our members here at Simpler Trading, these charts will be basically when I get to a chart and you want to take the levels off of that chart, just pause this after it's finished recording, okay? So you can go back and take a look at it. But I'm doing it this way so that I can skip the process of uploading, waiting for it to download, and so forth. It just saves a lot of time on my end. And it's archived right here, so this makes it really nice and easy to follow along. Now, I won't be answering any questions during these live sessions. It's basically just like if I were doing it by myself, but you guys could tune in live while I'm talking about it. All right. Now, if you do have questions, feel free to put those here on YouTube. Don't forget right now to please give this a like and share it with your friends or anybody that might be interested in trading. Let's go ahead and get started. This would be really straightforward this week. We're looking at the earnings whispers. I've been using this forever. It's free content out there on X or on the former Twitter. And what I like about it is that it's really reliable and it's really easy to get to. And it's plain and simple. You got your calendar up here Monday through Friday. And all I'm doing is looking across here and seeing if there's any names that I might be interested in trading this week. I love run-ups and I love to use my levels and have this as a catalyst that will push that price to my levels. Some of the things that I'm looking at this week that, right off the bat, what I see is Palantir, Lucid, moving on down. This is Monday afternoon by the way. And then on Tuesday, UPS, Lilly, Datadog, really action packed now that I'm looking at it. Rivian after close on Tuesday, that should be fun. That most likely would affect Tesla as well. AMC, Upstart, Twilio, Marathon, Celsius, one of my favorite companies. And if you guys remember, Pepsi, they signed an agreement or some kind of partnership with Pepsi, and ever since then, this thing has went nuts. So keep your eyes on that. I'd be really interested from a financial perspective how they're doing year over year and so forth. Okay, and quarter over quarter. So moving on down here, Luminar, and then we got RBLX here. I do have a long position at Disney. I believe that position is 500 plus days out. I'm starting it. I want it to be a 2% position, and as of right now, it's just under 1%. So if they do pull back, I'll be adding into that long-term position, just so in case anybody wants to know. I also have, excuse me, Leaps and Plug. These got up to about 200%. And now I think they're down to like 70% or something like that. And we've trimmed along the way. And my plan going forward this week, even if they have a quarter where it doesn't look so great, I'll be adding to those as well. I believe I have just under 200 days left on those options. Then we have the trade desk. We have Win. Moving on down here. If you guys see something that you like, that's great. These are just ones that really, pop out to me. Alibaba finally started to get somewhat of a run towards, that round number, and they just can't quite, get going. So it's been a really slow year for these guys, but I'm interested in see what they could do here on earnings. And as I move down here, Yeti, definitely interested in that. See how they did over the summer months. Six Flags, if you're into something like that. Other than that, I don't see any more on here that I'm that interested in. Second thing I'm going to be looking at is your catalyst, your econ data that's coming out. These are things that you need to be aware of because they can cause volatility in the market. Now here, what I teach is that we already find the levels. We know the levels before this information drops. And so this information is considered a catalyst that pushes price into those levels just more in a faster manner. Okay. But be aware of what's going on here so you guys can take a screenshot of this. But just so you know, this is also free information off of Market Watch. It's really easy to get to, and this is really all I need at the end of the day. Some of the things that I see here is Monday is pretty quiet. At 3 o'clock, we have consumer credit. Tuesday, NFIB Optimism Index, Philadelphia Fed President Harker is speaking. So you might want to know that. That would be 8:15 Eastern. All these times are in Eastern, but I am on Central Time here. U.S. trade balance, Richmond Fed President Barkin speaks, U.S. whole inventories, and then on Wednesday, Nothing far as this is concerned. Thursday, initial jobless claims, consumer price index, CPI year over year, Treasury budget. Next, we'll be looking at Friday. We do have core PPI, and that will be the main event coming in on Friday. But then, right as we open the market, about 30 minutes after open, be aware that consumer sentiment is coming out. Moving on, this is the results from last week using our neutral strategy. And first of all, thank you so much for giving me so much feedback. That was really helpful. And as you can see, I'm still going to be presenting that to you this week and for the rest of the time that I'm doing this. So again, if it does help you and it helped you last week, I want to know this week. All right. So we'll post if you have any, I guess, testimonial where you went out and actually used this and it worked for you this week. I'd love to know. And even if it didn't, I would like to know how and why, and if there's something that I could do better for you. So I'll just kind of go over this really quick. Again, these are the neutral strategies that we pushed out the previous week. And basically, it's really straightforward. You go long above the green, you look to trim and raise your stops as you get close to your first target here. You could see that we hardly even moved from 457 close to 458 and a half. But once you got the short trigger, this is where payday happened. So if you were following this, this worked out really, really well. And then over here on the QQQ, you never got a long trigger out of the neutral strategy. You did get your short trigger. If you stayed short, you ended up doing really well there from 382.57 as that trigger, and then closing out here at the end of the week at 372. So not bad for a $10 ride to the downside. Next is going to be this week's neutral strategy, and this is where I want you to go ahead and take a screenshot of this. You can place these levels on your chart. Remember, basically what we're looking at is going long above the green, going short below the red. Couple things, couple notes that I want to make on here. Notice that this is on a daily. Now, when we get into the room, I'll put this on a 4-hour, but I use the daily this week specifically to mark up this chart. And what I do is I use supply zones. Like this is a supply zone, and you can see we have a level there. I use Fibonacci, so basically I'm measuring from an anchor point that I find that's valuable for this week, and then I use fibs and I use my coefficients to help find these levels. And then after I find the levels, I look to the left to make sure that they are synergistically placed with candle structure and so forth. The big thing about this one going into this week is even if for some reason we start to go bid above the green, as long as we're in this daily cloud, this is going to continue to be a pain in the butt. It's going to be resistance until it's not. So any kind of trade to the upside, I, for one, am a little bit more cautious. And all that means is that I'm typically taking profits a little bit sooner, and I'm not as relaxed as I would have been weeks ago, right? It's not until we can create some sort of base and some kind of foundation. So for me going into this week on the SPY, again, I don't want to push a sentiment because I feel like when you do that, it gets stuck in your head. So let's just be super flexible and be willing to do whatever price is telling us to do at the levels that we've predetermined. So when I'm looking at this, for me, I'd much rather try to start getting long around the 442 to 435 levels, somewhere in here. And the reason why is we have, just really basic stuff here. We have a gap fill that could happen. We have a lower trendy edge. It might be hard for you guys to see. It's this purple line. And again, these are identifying demand zones and supply zones on higher time frames and or lower time frames. The purple is looking back on a month, and we're identifying those zones from there. Okay, so we do have this. It's close to that 439 level. It's okay if for some reason it were to flush here. That would be a key indicator. Once we get that flushing wick and then we start to see some buyers come in, things will look better. We'll have a range. We'll have this zone up here, and then we'll start to create a zone here, and then we can trade as day traders between this entire area there. Okay, now that's in the event that it does go bid. If we were to go short, again, just bring your stops down, you trim at targets, and that's how that works. Okay, if for some reason price continues to break down below 435, here in the room specifically, I'll give you new targets, and you guys know that we coach every single morning. Okay, over here on the QQQ, You'll see on the bigger picture, I'll go over this here in a second, but the trendy edge continued to be resistance. This is a big level. So the blue and the purple here, we have a double stack. So basically, these are two supply zones that are found on very high time frames, and they're stacked. So there's a lot of pressure here, and we can see that. I told you about it for the last several weeks. We were aware of that. We knew that this was going to be a target as we moved up here. But once we got here, it was time to pump the brakes. And that's what I'm doing. So for me, primarily, I'm around 99% cash on my options. I do have some equity that I'm starting to get into slowly. And when I say slow, I really mean slow, like 10 shares at a time until I build up to probably $10,000, depending on what stock that I'm trading. Okay. So on the cues, again, I explained that very well. Same thing, same levels, the resistance to the upside. Notice that on the daily, the cloud is still in the way, just like the SPY. The only difference here that you see so far is that we've gone from green to white. And so this is a momentum change, if you will. White signifies on my charts that we're basically entering a neutral territory, meaning we could see a small bounce here. Relief bounce is what we call it. We could continue down. It's not until we go to a red momentum that things start to really change to the downside. So for right now, those are just key things I want you to take note of, okay? Same thing down here, pretty basic stuff. I'm just looking to the left, finding some levels. You see we have our trendy edge. Do take note just really fast, 365.35s here, but we could bounce right at this purple level that's there on the chart, okay? Next, let's move into the higher or bigger picture. This is really important for me because I don't want a lot of traders to feel like, all we do is like, quickly get in and out. I am big into the bigger picture as well. I think this is where the big money is, the institutions. And so I want to be paying attention once again to bigger charts. So this chart itself, and what I'm going to do is actually I'm going to move this over for 1 second here. All right, and let's go right up here. And I am going to bring the bigger chart over. And all my indicators are on TradingView as well, but I want to bring this up because that format doesn't really give me a big picture like I want to show you guys. All right, so we're just gonna open this up a little bit. Each one of these are a quarterly candle, and that's what I mean by bigger picture, okay? So you can see that we had 3 quarters up, and that's quite a bit. And we, obviously we're not sure if this is going to be an up candle or anything like that. But the notes that I put on here for this week say price stopped at the bigger support, or sorry, that's the QQQ. Give me 1 second. Oh, no. Okay. Yeah. Price stopped at the bigger support mentioned in the previous note. That was 446. And you can see that price actually stalled at 446. So we actually closed at our support level. All right. So that's pretty neat. And basically what that was is the line here, the proximal line into the supply zone. If you look closely, you can see that we hit 25% of the supply zone and then we pull back. The formation itself is right there. All right, it's an inside and down formation. I have a video explaining how you can identify these, very quick and easy. Another thing that I'd point out on the quarter is that 446 will be this week's line in the sand, again, on a weekly basis. So these are quarterly, but for this week, 446 will be that line in the sand, which is this white line that runs all the way across here. And I want you to notice that we have the cloud support here. It's really far down. If I were to bring a cursor, you can see we're around 410. That'd be 30 bucks to the downside. But for some reason that 446 cannot hold, I'm asking you to make sure that you go back and look at the neutral strategy, the one that we just looked at, and find your targets from there. Now, from a quarterly standpoint, I would really be paying attention to this low, right? Like, can we hold the low 436? And if we can, then right now it's anyone's ball game, right? It's not until this candle starts to go inside that I start to think, well, wait a minute, maybe this quarter is an inside quarter, meaning that this candle, when we zoom in, could fluctuate and turn red and basically go inside. So this being the current price could go inside, find some levels, and then bounce somewhere in the middle of the quarter, and then we just end up being an inside candle, all right, with a topping wick. The topping wick saying that price pushed up into 25% of supply zone. The inside candle, again, this would be speculation, would just say, hey, we're lining up for an inside quarter, and then towards the end of the year, we could end up going inside and up, and that giving us more of a bang into 2024. Or, I'm just saying, could be inside and down, and we just kind of stall and sideways and getting ready for, some kind of channel going into 2024. Or, all right, this just says, hey, what? 4 quarters in a row, let's go ahead and go for it. Now, from a bigger picture, this is still extremely bullish. Right now, it's just a nice little healthy pullback. So please understand that. Next thing that I want to go ahead and look at is going to be the QQQ. Let's go ahead and pop that in there. Same thing here, folks. This is a quarterly candle. It went into your quarterly supply zone. It hit the trendy edge here, and the notes for this week say, update, the edge was resistance again, and now the weight is on 362. So kind of like the SPY, we have this level right here, which is that proximal line into the supply zone. This now becomes support. What was resistance now is support until I'm proven otherwise. Okay, so that's basically like your line in the sand as well. And if for some reason we break down below that, please go back and take a look at the neutral strategy. And again, I'll be coaching as well. So just ask questions and I'll be happy to give you any other targets that we may need. Now, from a bigger picture, same scenario I just gave you. We don't know what's going to happen here. Are we going to finish out the quarter? It just started, by the way. We have 1 month and 24 days left until that quarterly is closed. I love this about TradingView, by the way. It lets you know exactly how much time until this thing's closed out. So we don't know right now, all right? But this could end up being just like this. 3 quarters up, we end up making a new high or something like that. But for right now, it does feel like tech's a little heavy. Things have slowed down a little bit. And so, again, we'll follow price, but we could get the scenario of an inside candle. And then later on in the year or towards the end of the year, we have an explosive year run, okay? So that's what I got right now. 362 is that support level. And then underneath that, if things start to get really ugly, we could just take your fibs, your Fibonacci's, and go from this rally that started back here. You measure, and now our bull channel is actually right here. So we could take this one off, and this is going to, give me Control Z, sorry, right there. So your immediate support, once again, 357 and then 338, all right? So again, 357 and then 338. All right. And basically what I call this is the bull channel of the rally that I just measured. All right. All right. So moving on, the next thing that I want to show you is going to be the dollar or the DXY. I'm going to be looking at this from a weekly perspective, and I want to talk to you about it really quick. The market was moving down. The dollar was pushing up, but this is nothing new that we didn't actually identify months and months ago. And matter of fact, we identified the supply zone and we played the market very well. So we knew where the dollar would drop. We knew where the dollar would bounce. That's what supply and demand does for you before price gets there. So we're already planned. All right. So what is it doing now? That's the question. Well, the weekly went inside and up, and it pushed into the cloud, which was resistance. And if you go back and you look at the notes that I've been giving you for several weeks, I would expect the market to be choppy to down until the dollar hits resistance between 102 and 102.50. So again, folks, these are levels that I gave you, and this is the note that I gave you weeks ago, maybe even months ago. And if you look here, we're at 102.009. So a couple things while I'm sitting here talking to you about this right now, you will notice as I talk, and this is why I love doing the broad market analysis, because without this, I really would feel blind in the market. Notice that we stalled or stopped at support on the QQQ and the SPY, and notice that the dollar hit resistance, okay? So these are the things that we kind of start to line up and go, wait a minute, we stopped at support levels, right? And the dollar hit resistance. So nice synergy here. Now we got to figure out what the market wants to do. When I just look at these things, I say to myself immediately that we should have some sort of like um, relief opening bounce, or we gap down really quick and then we start to bounce into tonight's session just because of these levels that I'm showing you, okay? But let's keep looking at the price. Let's not get, too biased here or anything like that. It's easy to do. But this is what I see, until the dollar, and we use supply and demand zones on the dollar as well. This right here is an inside and down formation, so we can identify these by using our zone. All right, and we'll just call it IAD, which stands for inside and down. And prices, again, yeah, we could break out on the dollar. The market continues to move down, but right in here, I would expect it to start to drop again. Okay. It's not until things get really, a little bit scarier if the dollar starts to push above 105 and a quarter. That's where I'm going to be like, okay, we're definitely in a different cycle. It might be a while until we see some kind of, relief bounce that looks promising. Okay. Again, going back to thinking about quarterly inside months on the SPY and QQQ. All right. So, anyways, the dollar, just be cautious. It did hit resistance. Bulls, what you would want to see, bulls in the market, what you'd want to see is that the dollar could actually start to break back down below 101. All right. All right, so the next thing I'm actually adding this week, and I usually have the TNX, and I took it off for quite a while, but I was looking at it today, and I said to myself, okay, 10-year Treasury, back when the market was looking really ugly, everybody had their eyes on this. So I want to go ahead and throw your eyes on here and show you a couple things. The histogram down here is trendy blue. This is, caution here on the 10-year. You can see it rounded out. It came into the cloud. It went bid. And I've had these notes on here forever. It didn't quite get to my demand zone. We do have a topping wick, and if you come over here, you can see that we have supply. All right, and it hit supply, it went down. It hit supply, it went down. And now it's hitting supply again with a topping wick. So we want this to settle down. We don't want it to keep pushing to the upside, or we're going to start hearing a bunch of stuff in the market. It's doomsday. But I will say that I wrote this a long time ago, and I still mean that. This year is probably one of the first years in a while that we haven't had what I would call like a big reset. It was a slow beginning to the year. Like it felt like for eternity that we just kept going down and down and down, but we didn't have any kind of capitulation event. And it's been a long time. And I still believe that a lot of traders out there feel like the market should crash because of the, how they feel about inflation and those type of things, supply and demand out there, and just a nice old-fashioned reset. So I do say to myself, be cautious with the possible capitulation event if we start to see the TNX start to rise above 4.5, which would lead me now talking about the skew really quickly, and then we'll look at the VIX. So the skew, all right, the skew is letting me know what hedge funds are doing, how they're preparing, and anytime we go to this, okay, I'll go to the monthly just to show you the bigger picture, all right, just like this. Anytime that we started to get into this area, all right, where it says protect and risk off. What I mean by risk off is like, don't get too crazy, to the long side. It's okay to be wrong, but it's not okay to be extremely risky and be wrong. All right. But if you're trading with smaller size and you're just kind of filling it out, it's okay. All right. If you're not perfect, if you're not right, we're going to have those weeks and sometimes even months. But this is telling me you got to pump the brakes a little bit because this is pretty interesting. We're at 153. And if you were to put a SPY chart in the background, anytime we come into these major levels, okay, see this green going across here, you can see that the market, okay, the SPY, the QQQ, whatever, it pulls back. All right. And that's why we pay attention. Now, a lot of people are saying the skew doesn't work. That's not correct. It's been working the whole time. You need to look at it from a different perspective. I had to change my levels around this year. Okay. And these levels are working. It's just about a timing. Okay. So when you get up here, I keep these notes on here to remind you, extreme and I will buy puts 30 to 90 days out. The idea when I say that's anybody that's looking at this. You don't have to be perfect in your timing. You just know that it will take some time for events to happen. Okay. So we did pull back this week. We were at extreme levels. What I find interesting about the skew this week is that it went up. Like, why is the skew going up when the market's going down? That feels a little weird at the moment, which would lead me now. Let's go to the VIX just really fast. Okay, but the big picture here, just pump the brakes a little bit, all right, until we get out of some supply or we get down to lower demand. Now, when I'm looking at the VIX, this is really straightforward, guys. I was almost on par exactly with my target. And if you go back months, I told you guys we'd be looking for $12.29. And you can see now that we're there, price did push to the upside, or the VIX volatility index did push to the upside. And then you started to see a little bit of volatility in the market. Big deal. You know, all these things look normal. We just want to be aware of them, and know that the VIX had been going down for a long period of time. And here we are. So when I break it down, I like to look at any instrument that I'm trading with or monitoring. You use the system that I teach you. It's fractal. You can use it on all time frames. You can use it on all instruments. And what I would say to you is that the VIX is pushing into resistance at the moment. It's not until it would push over 19 to 22 until we could really see some volatility in the market. But I will tell you, as of right now, your resistance, so where I would expect the VIX to pump the brakes itself, is around 1875. Okay, so if it continues to push there, bulls, you would need this thing to break back down and head back down towards 14 and a half and get down here once again at 13. Now you can learn a lot by looking at the VIX. You can put this thing on a weekly, and you can go across, and all you do is just kind of draw a trend line, right? So we have a trend line down here, and there's a trend line here, basically a zone. And what you look at is what is the most common time spent at this zone, and it gives you this really good information to understand that it takes about 2 to 3 weeks in these areas before we get a spike in the VIX. Okay, just go back and study it if you want. I think that would be useful for you. All right, so the fear and greed index, all right, we'll get back to this, is 69, so it dropped about 10 points from last week. It still got us in the greedy section. If we continue to pull back, I'd expect this thing, basically to point right here to neutral again, unless we have a big event that causes a lot of volatility. But the thing is, we still have a lot of earnings, and because we have that, I think that we just fluctuate right now between neutral and greed. And that's my thought. That's just an opinion. But again, during earnings season, I don't like to get too overwhelmed by what I'm seeing on the technicals. Okay. Right here is your ES futures. So future traders, this is where you want to pay attention and go ahead and freeze this and look at the charts themselves. Again, this is the bigger picture. So this is a if this then that scenario. Notice that the ES futures, just like the SPY, right, has stalled very closely to support, and this is something I've had out there for weeks. We're finally there. We're pulling back to the 9 EMA, pretty close anyways. We're pulling back to, so this is your 9 EMA. We're pulling back to an inside and up formation. We have a zone here. So 44.86 to 44.19 is where I'd expect the market to kind of, hold this. Bears, if you're wanting the market to come down even more, you're going to have to close, in my opinion, at least 2 to 3 days under 44.19 for a significant move further down. But for right now, this is where if I was bearish on the bear side, I would be thinking, okay, have I had a good run? What are my other charts that I'm focused on, whether it be Microsoft or Netflix or whatever you're looking at? Are they coming into support? Because the ES futures is telling me, hey, we're close to support here, and we could get a relief bounce. That's all. All right. Moving on into the smaller picture, this is the daily. I give you triggers. I left this trigger on. This is from last week. And the reason why I left it on is because that's where we stopped on Friday. So if we were to get a relief bounce tonight, now you know why. All right. Now, if we don't, be looking for a buy trigger down here towards this trendy edge. You guys know what we do. We use a smaller time frame on the TTM squeeze, and we take a look at the histogram there to kind of help us in our entries and exits. Far as resistance goes, basically it's right up here at 45.19, and then short trigger, again, it has to line up on a smaller time frame, but it's right at the top of the cloud. So it goes back to what I was teaching you in the beginning of this broad market analysis, that if we can't get over the cloud, this stays resistance until proven otherwise. Okay. Moving on, this is the 4 hour. I've had this up for weeks. This worked very, very well. You can see it's very close to demand. So once again, the 4 hour, the weekly, the dailies, they're all showing me that we basically stalled and could see a relief bounce into tonight's open. Again, I don't really care regardless. I'm just telling you this is what the charts are telling me. I'll trade whatever price is doing when we wake up. I mean, I shouldn't say that I don't care. I do. I don't want to get too bearish when we get into demand zones, but we can still short in here if we're getting those signals. Okay. Let's go ahead and move over here. This is going to be the NASDAQ. Same thing. We hit the trendy edge. We pulled back like we expected. This resistance until otherwise. This is 15490 by 15605. Also, just like the ES futures, this is the support zone that I drew a long time ago. And you can find, potential buyers here. 9 EMA inside and up formations. We have some support here. Okay. We have resistance here, and then we have our short trigger right up here. Okay. All right, and our next, let's see, our next one is going to be right there. This is going to be your 4 hour. Haven't changed this in a long time. The 150-minute zone worked perfect. And once again, just verifying or kind of validating, we stopped on a smaller time frame right at a demand zone. So this is telling me a relief bounce on the open, but on the dailies, I would be careful if we can't get over the daily clouds or the 4 hour clouds. I want you to keep thinking pump those brakes for the longs right now, okay? It's okay to kind of scale in and stuff like that, but as far as right now goes, smaller, I guess a smaller window going into this week, thinking like less names, still your normal allocation, which you like to trade with, but maybe less focus all over the place. It was really easy when the market's just trending to the upside, kind of throw a dart, make money, but now it's a little bit different. Just be cautious, understand the things that I showed you. And if you have any questions, please reach out to me. So I really appreciate it. Don't forget to give us a like and share with your friends and family. Thank you so much.